Good morning, everyone, and happy Friday. Thanks for joining. Sorry about the delay of getting started here today. I had to see my kids off. Took longer than expected. Anyway, derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Today is Friday, the 23rd of December, 2016, Christmas, the day before Christmas weekend. It's 8:08 a.m. Chicago time, 9:08 Eastern. The main news that's come out this over the actually it's been happening all week is that the Italian banks are getting a 20 billion euro package to save the world's largest or oldest bank. Um, and then other than that, there's just fluff here and there. Deutsche Bank and Credit Suisse have reached a settlement with the U.S. for $12 billion. For $12 billion. And the U.S. is suing Barclays over mortgage-backed securities. Twitter's dropped 12% over the last week. I don't know if anybody noticed. Um, you'd think its stock would be going higher while it's being used by our incoming president, but uh, there are a bunch of executives leaving the company, and it's causing the stock to tumble. Other than that, let's see. German JFK consumer confidence came in at 9.9 in line. And that's about it for today. Looking at what's on deck on calendar, at 10 Eastern today, we get U.S. new home sales for November, 575,000 expected. And then we get University of Michigan final also at 10 o'clock Eastern. For December, expecting 98.0, and then we get the Baker Hughes rig count at 1 o'clock today. Let's get down to what we expected yesterday. Oops, there we go. So yesterday, the primary expectation is for the market to open in an open auction and then rotate down to about 22.55 and then take a bounce back up into 22.62. The secondary hypothesis is a push into the prior day's range and then to find sellers. And then I was looking for a large rotation down into the 22.55 area again, and then for it to stabilize and turn back up. Here's what happened. The market opened out of range and pushed right up against the prior day's low, 2260, by a tick. And then we saw a strong move down in price, but note that while price pushed down quickly, the delta did not go negative at all. It just seemed like it was a very thin move down. It looked like an open test drive, but the drive part wasn't entirely there. In either case, we got a an impulsive move down. Didn't quite rotate enough to create a new zigzag rotation, but then we got the continuation move. Then we have the beginning of a correction back to mid. This creates an opportunity, although this has extended itself already. And then we get the corrective move continuing higher and the expectations for it to go up. It didn't. It rotated one more time lower to 6.5. This 6.5 rotation is higher than a 6-point rotation from before. We pushed back into right where we're right into the prior point of control from the 16th at 22.52, and then it found a bounce up. Mostly the trade is kind of just tossing around. There's not really much of a drive either way. Volume's very light still. This is the last day before the Christmas holiday. Next week is expected to be even lighter as people take off for these 2 weeks. Schools are out, and a lot of people go and see family and stuff. Overall, the profile is somewhat balanced. There's a little bit of kurtosis in the middle here. It's a tight value area. Tight value area. We've got value from 57.50 down to 54.50, and the market has essentially made an inverted head and shoulder kind of formation. You can see it's clearly 22.58. Excuse me, 22.58 is key today. My expectation yesterday My expectation yesterday is that a break of 22.58 is what I was looking for. I was looking for a pullback and then a break higher, and I was expecting it to run back into the prior day's range. It ran out of time right here, and it continued this move higher as part of that pattern. But the expectation is to target this 22.64 above. Again, very, very slow trade yesterday. Overnight, here we are. We reopen. Very noisy looking chart here. We reopen right here, and then we carry up as part of the move up, as part of this again this push. We carry up, and then just after the second hour, third hour of European trading, we start to sell off. We're consolidating. The expectation is we will likely push this 22.55.50 lower. It's looking weak coming into today. I'm expecting this morning, the expectation this morning is for a very, very noisy, very light trade. The expectation is for an open auction, push higher, and then start to move lower, break that 22.55.50, potentially test the 51.50. Remember, the template day is the 16th here. That's The template day is the 16th, and the 16th has three distributions. There's one, there's two, there's three, and you start to look at that day and look at the action on that day to determine where the next support is likely to be, and it's just below it, just below at, oops, I'm looking at the wrong day. Yep, here it is. One, actually two distributions, sorry. I was looking at something else when I was doing that homework. Um, Below that is 22.49 is the low, 49.50 is the low. It's a double bottom. It's a weak low from a couple of weeks ago or a week ago, and the expectation is if it does push through 51.50, that weak low will become a key area to test. Expecting it to push through by a little bit and then continue higher. So overall, the expectation for today is for an open auction attempt higher, push down through 22.55.50, potential test of 51.50, and then back up. And that's the primary hypothesis for today. Okay. If we get an early test down, an open auction, and a test down, the expectation is about test down early. The expectation is we consolidate and we start to look to move a little bit higher. I expect it to come back into the prior day's range. It's likely to take this 22.50, 55.50 early before it turns up. I don't think it's going to go too far on the downside. In either case, a pretty good day to take off early, probably around the European close at 11:30 Eastern. And just do what you can early if there is opportunity, and then just walk away early on and start enjoying the holiday. You can see here that the actual volume again is much lower, is a fair amount lower than what the 20-day moving average is. Um, it'll continue to be that. Remember, this moving average is also influenced by the last couple of days or the last week's worth of low volume. So that's also catching up. So overall, that's what we have. I'll leave you with that. I did say my holiday greetings yesterday. Again, this is the last broadcast for this year, unless something happens next week that warrants another conversation. But I wish you the best. I wish you a safe holiday and some great time with your family. Happy New Year, and I'll catch you in January. Take care. Bye.